Hey everyone, and welcome to this week's episode of my YouTube channel. So this week I wanted to talk about one of the most important parts of a real estate transaction on the purchase side, which is saving for a down payment. To be honest, a down payment is one of the biggest inhibitors right now keeping people out of the housing market, especially for first-time home buyers, which I work with a lot. Saving up for that down payment for your first house can be kind of cumbersome. It gets easier after you buy your first house once you start building equity in the property that you own. But when you're first starting out with that first house, saving up for that down payment is a struggle, a real challenge for a lot of folks, especially if they're not receiving any assistance from special programs or from family. Those programs do exist out there. They come with stipulations for the loan and for the home purchase. And of course, if you're blessed to have family help with down payment for a house, you have that option as well. But for the majority of us, we're just on our own for saving up on a down payment on a house. And that's honestly a bigger inhibitor for folks right now than the cost itself of a house, because saving up for that percentage for a house can be a challenge. It's a lot. A common myth is that you have to have 20% saved down. You don't. Having more money to put down the house is of course better, because that makes your loan smaller, and 20% looks better for the buyer, or for the seller, I mean, and it just has other benefits as well as far as the loan goes. But you can put as little down as 3 to 5%. Every situation is different. You have to talk to your lender about what you can and cannot do. But you can get away with, in most cases, putting as low as 5% down on a house for a down payment and then putting the rest of it on your loan. But regardless, you do have to save up something for a down payment. So here are some strategies that you can use to try to save up for a down payment on a house. First, open up a dedicated account. Make this account only for your down payment. Just go to your bank, go to your credit union, your online brokerage, whatever you're using. Open up an account just for this. You might want to look into maybe doing a money market account, because a money market account accumulates higher returns than, say, a regular old savings account. I know my credit union has money market accounts. I think it's a great strategy to build up a little bit extra savings if you have a goal for something. So just open up another savings account. You should be able to do that at most banks, and dedicate to this goal. Automate those savings. So you get paid monthly, bi-weekly, whatever it is. Take some of that money and each week have it automatically taken from your paycheck to this dedicated account. Maybe it's as little as $5, but every little bit helps, right? So sit down, look at your budget, figure out what you can put into this account, and automate that so you don't even think about it. And guess what? And I can promise you, you won't miss it after a while, and you'll be glad you have that money when you're ready to buy. Next, this is a big one: curb unnecessary spending. This kind of alludes to what I just said previously. Look at your budget. Look at what you can cut out, and try to figure out ways to automate this, and look at some things that you can cut out of your budget. You might have to make some sacrifices, but this will help you out with saving for that down payment on the house. And even after you have your down payment saved up and you use that to buy a house, keep doing this. Then you can save up a nice little emergency fund for yourself, for a vacation, for repairs on the house if you need to do anything else to the house down the road, replace appliances, whatever. If you get into this habit now of curbing unnecessary spending, automating your savings, and opening a dedicated account, you'll be on the right path to having some money stashed away for your next rainy day or your next big purchase. You can use your retirement funds for something like this. This is the next step, next option. You can use your retirement funds. Of course, dipping into your 401k or IRA or whatever to try to use that on a down payment is never ideal, but it is an option. Consult with a financial advisor, consult with a mortgage lender, see what they have to say about that. It's not the most ideal situation, but it is an option if you really need to access that money for a down payment. And then finally, research down payment assistance programs. I mentioned this earlier in the video. Talk to a professional mortgage lender about this. There are a lot of programs out there. There's stipulations attached to them, such as having to stay in the house for so many years. It'll affect the loan, the terms of the loan, things like that. But there are programs out there to help folks who might need a little bit of extra help with saving up for that down payment. So those are just some of the options that you have when it comes to saving up for down payment on a house. It can be challenging, and it's one of the biggest first steps when it comes to buying a house, especially for a first-time home buyer. But if you can get through that step, you'll be on the right track to one day purchasing your own house. Hope this is helpful. I'll see y'all next week. Take care.